from an incentivization and philosophical model, I think that proof of work is the only way, because you have to continually insert energy from external to the system. With proof of stake, it's all internal.
What's up, my disciples? Coding Jesus here. In today's video, I'm going to be interviewing Nick Hansen, the CEO of Luxor Technologies. Luxor Technologies is North America's largest mining pool, with around 35,000 active cryptocurrency miners across 10 different mining pools. Luxor's mission is to build scalable blockchain infrastructure for the future. Nick himself is a software engineer by trade and a cryptocurrency enthusiast, having mined his first Bitcoin in 2012. Welcome to the show, Nick.
Hey, thanks for having me.
Awesome. So can you tell us a little bit about Luxor Technologies, and then what really is a mining pool? Because that's really the core of your business at Luxor.
Sure. So I'll jump into what Luxor is. So Luxor is a company founded by Eddie and myself, and then later had Guzman and Ethan join as well. And really it started as a project completely unrelated to mining. We were attempting to build something similar to S3, but in a decentralized ecosystem called Saya. It's called Skynet now. At the time, it wasn't quite ready, but we found a deep passion for cryptocurrency mining. And so we started building these pools. You asked what mining pools are. Maybe I'll jump in a little bit about what mining is at first.
Sure.
Mathematically, mining is equivalent to a lottery system, where, imagine I have between 1 and 1,000. If I pick the right number, I guess a number between 1 and 1,000. If I pick the right number, I win the reward. Well, I can submit as many tickets as I would like. The way that I can improve my ability to submit tickets is by submitting them faster. In cryptocurrencies, it's called your number of hashes, also referred to as your hash rate. Hash rate is a really common term used in mining. So I submit these lottery tickets over and over and over again, and if I get the right ticket, I get the reward. Well, the amount of numbers correlates to a term called difficulty in mining, where as the difficulty increases, the number of tickets that I have to submit increases as well. So, if the difficulty increases, a lot of people are mining and submitting their tickets. It goes up to, say, 1 million. Now the difficulty is 1 in 1 million. So I have to increase my hash rate to submit these tickets more quickly. So all that means is you're randomly generating a number, seeing if it solves the problem, and if it does, you win the reward. Now, if you can imagine, this number starts growing extremely, extremely large, and there's so many people competing. Say there's now 10 million people competing against you for this one reward. The odds of you getting that reward yourself is very low. Right. What a mining pool does is it segments out the entire number space. So if you have a 1 to a billion, I tell you, Coding Jesus, you go work on number 1,000 to 2,000. I give somebody else go work on 10,000 to 10,000, or 10,000 to 11,000. And that's what the mining pool is effectively doing underneath the hood, is segmenting up that number space and then telling everybody to work through the space at the same time. And inevitably, somebody will ultimately solve the problem. And then at that point, there's a couple of ways that you can get paid. We can take everybody's lottery tickets and average out the amount of work that you did. So if you did 5 tickets worth of work and I did 2, the total amount is 7. I would get 2/7 of the reward, and you would get 5/7 of whatever the reward happens to be. The other way that I can do it is, we know mathematically, and I'm sure your viewers would understand how expected value works. If I know that there's a 1 in 1 million chance of a ticket working or solving the problem, I know that my reward then is 1 over 1 million. So what the mining pools will do to make their fee is just reduce that expected value by some percent, say 3%. So instead of paying you 1 over 1 million, I pay you 0.97 over 1 million on the value of that ticket. Right. So it's a really simplified version of how mining works. There's a lot of other parameters and variables involved, but I think from thinking it through it as a probability problem, it makes the most sense, at least in my mind.
Okay. Yeah, that makes sense to me as well. Pool everybody's collective resources together and split the reward if somebody does strike gold, pull that winning lottery ticket, and actually
Yep.
mint a Bitcoin, solve that mathematical problem. Now, at the tail end of that answer, you kind of got into your revenue model as well. Can you
Mhm.
talk a little bit more about how mining pools make money? I know there's like a pay per share revenue model, there
Yeah.
are other revenue models. Can you just define those for my viewers?
Sure. I'll just jump into the two most common and simplest. So there's one called pay per last N shares. You can almost think of this as a proportional. So that was the point I described. So say there's seven, or there's the difficulty of the network is 100, and you've submitted seven. You've submitted 5 shares, and I've submitted 2, and we solve the block, or we solve the lottery. You would get 5 shares worth, and I would get 2 shares worth, and then the pool would just reduce the amount that you get paid by some fee. So, if the total reward was $100, you would get, you would get 5/7 is not a great example because you have to figure out what 5/7 is, but you would get 5/7 of the reward, and I would get 2/7 of the reward minus, say, 2 to 3%, depending on the pool. The other way is called pay per share, where I mentioned that each share has an expected value. So if the reward is 100 and the difficulty is 100, we know that each share that you submit is worth $1. Because it means on average it'll take around 100 shares, or 50% of the time it will take exactly 100 shares. So we get into this expected value situation where I can then give you the expected value of your share right up front before I ever even mine the block as the mining pool. I just reduce the value of the share by some percentage, say 2 or 3%. So instead of giving you $1, I give you 97 cents.
Got it.
And that's like the very, very basic way that mining pools make money. There's a lot of other ways as well that mining pools, we offer other services like consulting. If you wanted to set up a mining farm, if you wanted to construct, if you wanted your own private mining pool, that's something that, if you're a really large miner, that's something you're interested in. There's a lot of ways that Luxor makes money, and and other mining pools as well, not just Luxor, but those are a couple of that's the really, really basic way that mining pools make money traditionally.
Got it. Okay. Um, I'm very interested in the business itself, the business component. As I understand, you
Yeah.
were previously a senior software engineer at Salesforce. You then made the jump to start your own company, and I'm sure there was a lot of
Right.
difficulties in doing so. So, can you maybe
Yeah.
tell me what the largest difficulty was to start a cryptocurrency
Yeah.
mining? I mean, the crypto space is entirely new. There's new regulations coming in and out all
Yeah.
the time. So, what was the biggest challenge, and how do you overcome that?
Yeah. Yeah, regulation would require its own podcast. But I think that up to now, just from a business sense, actually scaling the people problem has been, is, and I think will continue to be the toughest problem for Luxor. When you reach the inflection point where you can no longer have a one-on-one with every person on your team once a week, say 15 to 20 minutes every week, that becomes a really big inflection point, because now you're trusting everybody in your org to do their jobs, and you don't have any way to really get much feedback like you used to, or at least you get much smaller tidbits of feedback, and you get a lot more of them. And so you hope that the samples that you're getting are representative of the overall org. And that's what we're going through right now. We're in a bit of a blitz scaling mode where we're attracting talent, trying to hire as many people as we can, and keeping the bar for talent really, really high is something that is a really big challenge. From the technical side, mining pools at face value seem pretty simple, but there's a lot of little micro optimizations that you can make in the code to really improve your competitiveness in the market. And the way that Luxor is built, we've tried to incentivize ourselves to be the most performant and efficient mining pool that we can be. So anytime Luxor is more efficient, Luxor makes more money, and so do the miners. And we try to incentivize ourselves that way. So those are, that's kind of the, there's the people problem, but then there's also some tech that really has to be part of the foundation of a mining business like Luxor's.
That makes sense. That makes a lot of sense. Scaling, getting the right people, that's very important, critical to any business. Another thing that I'm thinking of as we're speaking is, this industry moves so fast. There's always changes. Protocols
Yeah.
are changing, people's requirements are changing. What has been kind of the largest trend that you've noticed recently in terms of where the mining industry is moving? Where are we heading towards?
Yeah. So maybe I'll just keep like I view there's been maybe more, but I view there's like three epochs in mining right now. The first, say, 5 years of mining was really about knowledge asymmetry, meaning I know about Bitcoin and you don't. I have the ability to now go mine Bitcoin effectively, competing with very, very, very few people because there's only a handful that actually know that this thing even exists, or even if they know how it exists, how does it work?
Right.
So that during that first period, it was more so about knowledge, who knows about it and who doesn't. And then there was the next 5 years, say starting around 2015, when we started seeing like the industrialization of mining. At that point, it was just a land grab for whoever could get the cheapest power. Generally, that was, most likely it was like either coal-fired plants here in the U.S. And some abroad, and then there was also, like wind and hydroelectric in the Sichuan province in China. Not wind in China. Wind would be the U.S., but anyway, hydroelectric in China. And really what we were looking for at that time was just the lowest price power you could possibly find, which is really the number one expense for Bitcoin miners. And during that time, it didn't really matter if, I didn't really care about the sustainability of my project or what the long-term view was. It was just as long as I could lock in 3 cent power somewhere, I would be competitive. And I view that era as coming to an end, where right now we see a very large push in the Bitcoin mine, cryptocurrency mining and Bitcoin specifically, in that industry, pushing towards ESG and sustainability. And I think this is really good. I think this really changes the narrative around Bitcoin mining from being like a boiling the oceans and burning the earth type of activity to where we're now driving energy innovation. There are companies that are trying to capture what's called curtailed energy that is being produced but can't be used. So, for example, say a wind farm that is in North Texas is producing a ton of energy that can't be used. They either have to just discard it or spin down the wind farm. Say in the same vein, there's something called stranded gas capture. Companies like Crusoe, Great American Mining, they're going out and putting Bitcoin miners on oil platforms, grabbing the methane and other gas that comes off, and using that to generate energy rather than just letting it go into the atmosphere. These are ways that I think, and what those help craft the narrative around mining as actually a good thing for the energy ecosystem. But at their ethos, they are more about sustainability, and not sustainability from the environmental sense, but sustainability from the business sense. In the epoch I mentioned, the previous epoch, it was just about getting the cheapest power you could get, without regard for how long can I run this. But now it's a lot more around, am I going to be able to build a business that'll last 10 years using this energy source? And if not, I may not be able to make this business work.
I see. I see. That makes a lot of sense. I mean, I remember when I was in grade 10, there was another individual that was mining Bitcoin on like his GPU, and he was mining maybe a block, which was at back then I think around 50 Bitcoin every 2 weeks or something like that. And he was mining it because I didn't know how to mine. So he was kind of like an early mover, right? So that trend really makes a lot of sense to me. And so as we're looking forward, above and beyond simply providing a pool for people to pool their collective mining resources together, what sort of products are miners looking for? Because pools, there's a bunch of different pools, and like, what are they really competing on? How are they attracting and retaining talent? Is it not talent miners? Are they just competing on lowering their fees? Because that's a race to the bottom. How do pools differentiate themselves, and what products are miners looking for in a prospective mining pool?
Yeah, so we view mining pools as effectively table stakes now, right? If you have a mining pool, that's like the basic level of service that you need to provide to your customers. On top of that, you can start building a bunch of different features that will attract miners. The number one lever that we have is fee, right? That's like the biggest one, and that's most likely never going to change. And so if that's the case, that makes mining pools a terrible business. And I would say that they are a terrible business. So you need to start building businesses around them. You can start looking at something like Financial services for miners. Miners right now are forced to take a very long position on Bitcoin, and they have no way to hedge any of that risk. So getting into the business of allowing miners to maybe sell forward some of their hash rate, say I produce 100 petahash is a term. Say I produce 100 petahash, I could sell 20% of that for 3 months forward and lock in some of that theoretical gain. That allows me to de-risk myself a bit from the volatility in mining. It also allows me to make investments that I wouldn't have been able to previously make. But that does need to be facilitated by somebody that actually captures the hash rate, and because the seller then would, or the buyer would then be taking on some counterparty risk. So we do offer, do offer currently and plan to expand on our risk mitigation strategies. We also plan to expand on our financial services offerings, meaning looking at lending platforms, things like that. So that's just an example of how a mining pool can help make miners more profitable, hedge their risk, give them opportunity, and then go out there and compete with the other mining pools. Is that I think that, yeah, that's a pretty good overview. And then there's the smaller things, like something as simple as like a notification platform. Say one of your miners goes down. Do you want an email, a Discord message, a Telegram, a push notification via a mobile app? Those sorts of things can can tip the scale for a miner, and that's really where we're trying to push as well. So we're pushing on the broader scope of financial services, as well as the more narrow focus around just the services provided within the mining pool itself. Better reporting, faster dashboards. Presenting all this data is very slow usually in the browser. So can we present that data faster and build a better notification platform, that sort of thing. So multiple ways to compete.
And I can really see the amount of effort you guys are putting into the business as well. I mean, the UI looks beautiful. Even speaking to you privately, you're constantly trying to better the user experience. So that's amazing.
Appreciate it.
No problem. Another question I have when I'm reading your website, something that stood out to me was your platform states, "We strongly believe that proof of work is the only proven and tested way to secure a decentralized platform." So as a mining pool operator, what are your thoughts on alternative forms of mining like proof of stake?
Yeah, that's a really common question and a really good question. It's very salient, especially given Ethereum's proposed proof of stake switch. Some say soon. From what I've heard, it's going to be 2+ years out, and we'll see where that actually ends up being. But the root of the question, I don't have an academic answer. There are people who have PhDs in consensus algorithms. David Vorick from the Skynet team has spent his life dedicated to consensus algorithms and decided that proof of work at this point is the only one that works. And the reason, I think, not from an academic perspective, but from a philosophical and incentive-based perspective, is that the incentives are aligned for proof of work more closely. In proof of stake, if I own the most coins, I have the largest vote, which is going to lead towards centralization. Like you can't think about like this year or the next year. Think about like 100 years down the line. If I have the largest vote, I'm going to continue to make votes that increase my share. And in the as time trends towards infinity, all of the coins will eventually get gobbled up by a single entity controlling it. That doesn't even get into like the Byzantine general problem, which I don't think can be solved because the consensus is being driven internal to the system, meaning the actors within the proof of stake system are the ones making the decisions. It's like its own little globe. There's no external governance. With proof of work, you have to consistently insert energy and reinvest into the consensus. And I think that forces actors to be incentivized towards acting in the best interest of the currency itself. Meaning, if I'm a miner and if I've already invested $10 million in miners and my power bill is $1 million a month, the currency that I'm validating, I want to remain valid. And I don't want anything to happen to it. And so I would further incentivize this decentralization and all of those things. So I think from an incentivization and philosophical model, I think that proof of work is the only way, because you have to continually insert energy from external to the system. With proof of stake, it's all internal.
Got it. Okay. Thank Thanks for your thoughts there. I'm sure there will be a heated debate in the comment section.
Yeah.
All right, my final question for you is with regards to a bit about what you actually spoke about, the topic of centralization. If anybody wants to go on blockchain.info and look at the top mining pools, the majority of the network hash rate seems to be coming from several pools, all located in China. Do you see this concentration as a threat to Bitcoin?
Yeah, I do, and I think I have other podcasts where we talk about this as well. I think this is definitely a problem. Fortunately, the trade winds currently seem to be pointing towards more decentralization. Actually, just recently we saw there was some coal mines that had issues in the Xinjiang province in China, which resulted in them bringing down a bunch of the electrical power plants that they have there, which brought down something like 30 to 40% of the Bitcoin mining network, the hash rate. Sorry, the hash rate on the Bitcoin mining network, and that resulted in slow blocks, meaning it took your transactions longer to confirm. Transaction fees skyrocketed, and it really was a wake up call for a lot of us deep in the industry that wow, this is I've been pushing on this for years now, and we're still so far away from being as decentralized as we need to be. There's a lot of driving factors as to why China is currently dominating the Bitcoin mining space. One, they have very cheap power, so there's really no reason to export any of the machines. All the machines get made in China, and and then there's also some regulatory issues that make it difficult to get miners into the U.S. There were tariffs that made miners infeasible, especially during the bear market. It was just not economically viable to get them into the U.S. At that time, and though the U.S. does have its own sources of cheap power, it just wasn't very possible with those tariffs in place, or you would have to have a very, very long view on your mining operation, which I think we're getting towards. Back to the question of whether this is a big concern, it is, but I think that a lot of this is changing. We're also seeing a lot of miners moving into other parts of Asia, as well as even into some parts of Europe. So I think we're going in the right direction. I do think it's still a big risk, and decentralizing the hash rate in a geographic sense, where the miners are physically located is one thing. That's one of the main reasons Luxor came about, was to build a mining pool that also decentralizes the virtual hash rate, where the hash rate actually terminates and turns into a block. So, yeah.
Okay, it makes a lot of sense to me. I don't follow Bitcoin as closely as I used to, but
Right.
as I understand, even checking the concentration of which mining pool owns the most hash rate, it doesn't seem to have changed very much in the past 3 years. I checked it yesterday. I remember checking it a couple of
Yeah.
years ago. The big pools, Ant Pool, etc.,
Yeah.
via BTC, they're all still up there. Okay,
Yeah.
that makes a lot of sense, and that concludes our interview with Nick Hansen. If you're interested in working either at Luxor or with Luxor, you can go to luxor.tech. If you'd like to mine with Luxor, you can go to mining.luxor.tech as well. Any final words here, Nick?
No, I was gonna pitch the recruiting. So very happy. Would love to chat with anybody that knows, C, C++, Golang, TypeScript, Postgres, Python. You're passionate about the industry. You are a data scientist, data engineer. We produce a ton of data. Need people to analyze it. We write a lot of really interesting code. It's the best code I've ever written in my maybe decade of experience. It's the most interesting problem that I've ever had to solve. Come help us, come do it. Reach out to me on Twitter, LinkedIn, email, anywhere. Be happy to chat with you about it.
Awesome.
Thanks a lot for the time today. I really appreciate it. This has been great.
No problem. Thanks for coming here, Nick. Thanks for being willing to being interviewed. And if you like this video, guys, make sure to give a thumbs up and subscribe. That's a plug for my own channel. See you guys later.